It all seems so simple. You feed the cows, milk them, and ship the produce off to thirsty customers both here and overseas. But at the market level, of course, the dairy industry is far more complex than that. The recently announced Dairy Futures Market will change the way our produce is bought and sold worldwide by making it easier to bank on dairy prices in the long term. The market will be run by stock exchange operator NZX. CEO Mark Weldon says the nature of futures markets means New Zealand farmers can essentially bank on the product, holding its value long term and protecting their investment in land and equipment.
If you have a milk payout that is heavily influenced by the milk price and your cash flow bounces around like a yo-yo, and I'm on the board of a farm in Canterbury, so I'm quite aware of how up and down that yo-yo is right now. The ability to actually secure your cash flow through simply hedging the milk price is a very powerful tool.
The market price will be set by the Fonterra Global Dairy Trade auction, which has just increased its frequency to twice monthly announcements. Fonterra GDT manager Paul Graves says the more regular trading dates will bring greater transparency to the volatile dairy market.
You just have more visibility as to what's going on and more timely price signals. So instead of knowing what's happening once every month, we'll now know once every couple of weeks.
Mark Weldon says the Fonterra auction is the logical reference price for a futures market, as it produces the most reliable figures in the industry.
There's a lot of trade out there that references the GDT price but doesn't actually go through GDT, so its impact is a lot bigger than the pure tonnage that goes through the platform.
But not everyone's convinced. Open Country Dairy CEO Laurie Margrain says his company has reservations about using Fonterra's prices as a benchmark.
We just have some concerns that having the Fonterra Global Dairy Auction, having those prices a key input into the contract futures market is potentially a conflict. And as Fonterra will no doubt participate in the contracts market, their auction, which they drive, their auction being a key input, there must be or could be the perception that the integrity of the market is damaged. Perception only, I might add.
The futures market will be traded and settled in cash, unlike other commodities such as oil. Mark Weldon says the market research indicates a strong preference for a cash market.
The volatility in the price of milk is enormous, so people need to be able to hedge that risk. So a futures product which is cash settled simply means I can take the risk out of the price movement, but I don't end up getting random dairy through a futures market.
The market will initially only trade in the most stable dairy commodity, whole milk powder. There are plans to add skim milk and anhydrous milk fat if the initial foray proves successful. Mark Weldon says the goal in the first year is to get a foothold and build from there.
So we would say in 2 to 3 years, if we get up to 2 times physical, that would be a really good start, and you would be confident that in the medium term, so 5, 6 years, you'd end up like a palm oil contract, which is a really robust, a really strong futures market centred in New Zealand, supporting a lot of people and supporting the industry.
The market will open on October the 8th, and more information is available on the NZX website. As Mark Weldon says, the idea is to provide the developing world with healthy, nutritious New Zealand product.
Dairy is just such an incredibly important thing for the emerging middle class. It's proteins for babies, and it's important that there are tools out there to help people manage those risks.
Drew Chappell, Country 99 TV News.